What up, what up, what up? All right, guys, just like the video says, I did go all in on the stock markets. If you watch some of my previous videos from about a month and a half ago, I was very bullish on the stock market for technical reasons. And another reason was I'm a contrarian long term investor. And when everybody thinks the stock market is toxic and we're going into recession, inflation's at all time highs, interest rates are rising, there's wars breaking out in Ukraine, nobody wants this market. That's when you're the best time to start daily dollar cost averaging into the market. Okay, so way back on June 28th, so about a month and a half ago, I talked about this falling wedge pattern that we were setting up for massive breakouts. Juicy move is how I worded it in my title. And then literally a week later, I talked about how that breakout happened and what I expected to happen to the NASDAQ and tech stocks and risk on assets. On the NASDAQ, so what we could see is price break above this 297 tomorrow, move up here to resistance in the next week or so, and then in the coming month, retest this breakouts before we ultimately get to move higher to potential new all-time highs the next year or two. All right, so that video was just over a month ago, July 7th, and what happened, we broke out, we retested, and now we're moving up to the next resistance level. In that video, I talked about how risk on assets, we're literally going to have the biggest returns when we actually break out of that falling wedge pattern. Risk on assets have indeed had the biggest returns. So I talked about ARK Investments in one of the previous videos. It's up 17.5% the last month. Coinbase, big investor in Coinbase, up 71%. Really was accumulating that one over the last few months. Peloton, just another risk on asset, 33%. Huts, one of the videos I made about a month ago, up 74%. Grow Generation, another video I made about a month ago, up 40%. CGC, Canopy Grow is up 43%. So when everybody else literally, guys, is bashing the market, doesn't want to touch the markets, when all you can read and all you hear on the news is we're going into recession, the market's going to go lower, that's when you want to start buying. Trust the technicals as well. When we hold the 200 weekly literally 4 or 5 times the last decade, I'm going to trust it to hold again this time. And this is the most fear that I've seen in the market literally since COVID happened way back in 2020. So every few years, guys, we get these big, massive pullbacks, and these are the ones you want to buy or start to dollar cost average into. And when the moves happen, they happen quick. I mean, we might get a move back down, another opportunity to buy, but a lot of people, man, they're going to be shooting themselves in the foot for not buying this. All right, peace.